Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the S&P 500. And so I thought it'd be interesting to go over shorting the market because the S&P 500 as well as the NASDAQ approaching and or at all-time highs. So it seems like it might be a good time to short the market moving into the new year. And so here on the SPX, the S&P 500, we can see that we're just about at the all-time highs. And if we zoom in on the chart here, going back to with this low here at the end of October, it does look like there are some gaps to the downside that need to be filled. So there are a number of reasons why it might be a good idea to short the market. But again, this is Degen Ed, not financial advice. And so there are a few different ways to short the market. I thought I'd go over. They all seem pretty interesting to me. So the first one is ticker symbol SH, which is a ProShares short S&P 500. And this is just negative 1x, so just inverse the S&P 500. And so looking back to that low at the end of October, that would correspond to a high in the SH. That looks like there's a pretty considerable move from the recent lows. So basically going from the close of the day right around $12.99, $13, going up to the prior high at the end of October, that represents about a 17% move. So I think that's pretty interesting. And that's also, spanning, let's see, about 2 months. So maybe by the end of February, we could be returning to those levels if it is to be a symmetric move. And so, 16% with the SH. If we look at the SQQQ, which is the short NASDAQ, this is actually, if we look at the profile, negative 3x. So it's leveraged 3 times the NASDAQ, but short. And so if we look at that going back to the end of October and we take that measurement, that represents an approximately over 70% move. So a little bit more intriguing than just going with the SH. The SQQQ is pretty interesting. And now also I wanted to throw on the table the SOX, which was just introduced to me today. This is short the semiconductor. This is also 3x leveraged, and it's a pretty appealing price too. Only $5.82 on close, whereas the SQQQ $13.45, and let's see, the SH $12.99. So the SOX is kind of like half price. And if we take the measurement going back to what is the highs of late October, and we take a measurement from the close today, right around the close, going to the highs, that represents a whopping over 140% move. So if you are going to short the market, there are a few options there. All, come with their risks, and rewards, but they all do have, the same kind of structure. So I think either way, they're probably going to perform the same. But, depending on that leverage, you're going to get better performance from ones like the SOXS versus the SH. But those are my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments below, and subscribe to the channel for more videos like this, and Happy New Year.